I like Facebook already. You look at the forward PE on this stock, it's trading at a 21. All it's done is go up, up, up. Ever since all the security issues, everybody was so concerned. Stock went to 150. Here it is over $200 a share. I think there's a lot of different interesting things. If you go back to the last earnings, they really crushed it once again, which they always seem to do. I mean, their numbers, you look at the ad revenue, what they're doing there, but today, they actually had another announcement. They're going right after YouTube. Now, remember we talked about Snap long ago. Tried to buy Snap. Didn't work out. What did he do? Mark Zuckerberg created Instagram, right? They buy Instagram, and they absolutely have exploded with that. Well, now Instagram's going to go to the video side and go head-to-head with YouTube. That's going to be huge. This stock is still very, very cheap.
Everything Pete said is spot on at 100%. Now, in full disclosure, when it was trading 155 after the whole Cambridge Analytica thing, I thought it was going to flounder for a while, if not go lower from there. So clearly the last 30%, and that's what it's up, I think 30 to 35%, I've been wrong. But you have to ask yourself, the move of this magnitude over this period of time, is it justified? Valuation, absolutely. And that has been the argument for Facebook forever. But I still think there's got to be some headline risk as we go into the next earnings.
At the end of the day, you know, there's a stock that's made how many new highs over the last year? It's up almost 100% over the last 2 years. So every time you said to fade it, you've been wrong here. But to me, I just don't buy stocks on runaway breakouts like this. I think that this goes for Facebook, too. There's just unusually positive sentiment in all of these names right now. And I've never seen anything like it in 20 years in the business. And you could have said that at most points, again, in the last year. And this is a stock that's up 50%. Facebook's up 30-some%. Google's up 20%. You know, I've just never seen anything like it. And we have technician after technician come on and tell us that these 5 stocks or 4 stocks, whatever they are, that make up $3-4 trillion in market cap are equal to the bottom 250 in the S&P that have done nothing. And we're just saying trade it, trade it, trade it. So to me, at some point, you know, chickens are going to come home to roost. But when you have guys like Paul Tudor Jones last week or whatever say we're going to melt up at the end of the year, I don't know how you wouldn't expect all of those stocks, these FANG stocks, to melt up with it. So to me, I'm a reluctant fade it.
All the stocks in the FANG, that one scares me the most, by far. And the reason I say that is you look at it on a valuation perspective.
Would you fade it or would you reluctantly trade it?
I would reluctantly, but fade it.
Okay.
Kind of what Guy, I think, did with Facebook eventually when he got to the point.
What has David Faber been covering so well over the last couple of weeks? What?
The media merger.
The media mergers. Do you think it's coincidence? I don't believe in coincidence. And Netflix is basically going up $40 since this whole thing. No, why is that? Because I think the reason why everybody wants these these Fox assets is because they want to get they want to get a controlling piece of Hulu, and they want to be able to compete with Netflix. They can't do it. Reed Hastings has done such a great job. He's got a 5-year head start. I think Netflix continues to rally into earnings on July 16th. So once again, emphatically traded.
I think, you know, it's had a very nice run. They'd had an all-time high today, and I guess it was on the Instagram billion.
Again, with the wrong look. They messed it up.
Trade it. See, they don't even know
she owns it.
I own it.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.